Hey there, random internet strangers. It's Random Forex Guy, your favorite random Forex guy here, talking to you about crypto. I know I still haven't talked about Forex a little bit, but that's because the Forex market has been dead, so that's what brought me over to the crypto. So let's go right to the charts and let's take a look at the flim flam over here, where we got the flip flops over here, and then we got the up and downs here. We got big candles here. That's the big daily candle here inside the old hourly candles. And we go over here. We come inside, outside the Ichimoku and inside the Okamochimo, and then back inside. And then here we go. Where are we above the alligator, down below the alligator? As it crossed, we crossed up, and we've gone up into the Bollinger Bands at the same time as gone into the alligator, and then we cross back down, and then we go down in here. We take a look here at the MACD as it crossed down with. We got some overbought signals here, and then they drop down back here, and then at the same time we got the MACD with the 14. But my moving averages on the MACD that we've dropped down below those, so that's a good time to buy. Possibly we're coming up, but there's might be a good time to sell as well. And we'll go up here, and you'll go up here. Normalized volume here, velocity here. We're going up and down. We're in neutral position right here. Well, we're actually going down here. We go. We got no divergence. We got a divergence over here, but then and now it's just kind of leveling out and all. Anybody else? You know what I mean, Garden? You know what I mean, Burton? We gotta go over here. We gotta do desert, goddamn desert berserk. We go over here. We got Bollinger Bands here. We go going back down into the Bollinger Bands with desert berserk. We're going outside with standard deviation. So standard deviation going up and down the way, and so we don't. So it's a good time to buy. Maybe a good time to sell as well. I don't know. You know what I mean? You ever run into people like that? Thank God there's an easier way. But before we go here, let's go back. I want to take a look at something. What drives all of these indicators? You have to ask yourself, what causes these indicators to move? Very simply, it's price. Price drives the indicator, every one of those indicators. So price should be able to tell us everything if we're smart enough to look for it. And narrowed it down, particularly with commodities. With Forex, it's a tiny bit different, not much, but with commodities, very simplified. We have, my favorite, the Heikin Aishii, and this particular Heikin Aishii still allows me to see the candle bodies as opposed to the Heikin Aishii bodies, because the Heikin Aishii bodies are a little bit different. And so that allows me to see the overlying trend very easily and quickly. So I find it very helpful and useful. This is the hourly chart of Bitcoin, by the way. Then we have our supply and demand. You watch the Sam Seaton videos on my website, and go Google Sam Seaton. Just take in everything that he has to say. Some of the stuff about adding stochastics and MACDs, I don't believe in. You don't really need that because price drives the behavior of those indicators. So that's why some people like that indicator, like that official confirmation that maybe it's easier for them to read than price is, but price tells me very simply, where it's going up, where it's going down. If we're getting not so high highs, like what's happening here, we're starting to get a slowdown because we're getting the pressure, and now we're building up here. Some resistance, some demand, or some supply is starting to go here. So people are starting to sell. We're starting to get a lot of pushback. There's a big fight up here, and then we have a small demand level down here. This would be a good place to place limit orders. We have a larger demand level. I don't know if we're going to get back down to this level or not, quite honestly. But I'll get to that in a second. But then we have to ask ourselves, okay, if price drives all those indicators, so most of those indicators are just being driven by price, so we only really have to look at price and how it's behaving, then what drives price? Glad you asked. Very simply, Oops, that's the wrong one. What happened? Why did I not get that? Sorry. I thought I had it set up, and it did not have set up. Hang on a second. Here we go. Market capitalization. This is the 7-day chart of market cap. And you notice a big rise right here. Right here on 113. Just last Monday, I believe that was. And now it's leveling out a little bit. So we had a lot of people jumped in. A lot more money in the market. So that's what drives price. So if we know those two things, we know price and we know market cap, we can get an idea where this thing's going. Because market cap drives price. It's really that simple. People want to complicate the peanut butter and jelly sandwich. The more people get in here, the higher the price goes. The more money that's involved, the higher the price goes. It's that simple. Doesn't that look very familiar? Where's that? The 13th. Go to the 13th. Right here's the 13th. So we got the market capitalization. There it is, right there. That's where it added in. It actually kicked in on the 14th. The price actually. So if we follow market capitalization, that's a leading indicator. All those other indicators I threw up, those are lagging indicators. You know, and I'm not knocking people that use indicators. I think that they are useful. Sometimes it makes it easier to read. I definitely use the Heiken Ishi. That would be considered a lagging indicator, but it only lags by one candle. But that's why I like it so much, because it is one of the quickest of the indicators out there that's accurate. So I just wanted to bring that up. It's really, this is not rocket science, and people try to make it out to be that. It's simple supply and demand. I'm getting deeper into some more commodities, which are coming to be taught. Until the Forex market picks up, I'm going to continue to be looking at. This is what I look at. I'm not going to explain it too much, but this is basically my algorithm that I use. And it's been working pretty well with commodities. And these are all weekly. I'm still paper trading this. This is kind of new, but by combining trend trading with reversal trading, I think I've stumbled onto something that I actually learned a long time ago in my earliest trades, trading out of my 401k, where all I was doing was buying the 52-week low of the company that I was working for at the time, and sold at the 52-week high a year and a half later and doubled my 401k. And so it's what I'm kind of doing right now. I wish I'd gotten into sugar quicker than I had thought I did. And this is gold. It's just kind of ranging around right now. If we go way out, oh, this was palladium. Palladium's gone insane. I didn't get into that trade. I wish I had. My broker doesn't offer palladium. My regular broker. This is a demo broker. Corn's trading kind of low right now. Looks like a good opportunity to buy on a dip. Soybeans, same thing. All the foods looks like they might be a possibility of looking for good dips, buys on the dips. Natural gas continues to drop, but we are reaching a monthly support. And it's really that simple. The Heikin Aishi, and I got my oomph indicator. This is the one I use, the TDFI, trend direction and force, but you can pick whatever you want. I'm not going to give out what I use in this indicator. There's thousands of different ways you can use this and thousands of different inputs, but that's a trade secret. You can figure it out yourself if you're not lazy. And then I have a couple of supply and demand. One for the weekly, the solids are the weekly, and that's the monthly. And then the little arrows, those just tells me when it's all the monthly and the weekly Heikin Aishis are in tune with each other. That's it. You don't need a whole lot. When you're up here, you're looking at everything from a bird's eye view. Now, if you scoot down to the M1 and want to be a scalper, things get a little hectic. I mean, there's no real patterns here that you can grab a hold of. You're going to lose out a lot more than you win. But if we move back out to the weekly, for commodities in particular, they have very, very long trend lines at times. Incredibly long time periods. So if we can capture points where they're at monthly lows or monthly highs, and we know that they're going to turn around, we can dollar cost average in on the reversal and then make out like bandits when price eventually, unless we get hyperinflation or hyperdeflation, which then the government will step in and stop that. There's no reason to be fearful as long as we're using good money management. So just wanted to go over that today. And let's go over Bitcoin real quick. No, we won't do that. Let's scoot this up a little bit. Come here. It's not cooperating as usual. Things don't want to cooperate today. Here we go. Okay. You can see we have some new supply forming up here. So that's interesting. That's going to make it harder to break through that 9,000 mark. We got some supply building up in there. But remember, looking at the market cap exploded right here and then kind of leveled off here, but kept pushing upward. So as long as money continues to flow inward into the market, we should see a breakthrough to 9,000. I would probably suspect around Monday because, not the big money is out playing golf and, hanging out at island resorts, if you know what I'm saying. So, hang tight, kids. We got some bumpy ride to go through yet. We got this little blip here, and then we got a couple of big areas up here just before 10,000. So, but once we break above 9, I don't see us going back down any below 8,000 for quite some time. I think that we are definitely in the bull market at this phase. The market cap shows that. The market cap is clearly showing that we are moving up. We had some leveling off here in the 5th. That was Wednesday, the 15th. Thursday, Friday, we had some more coming in, and it's pretty steady since then. So we've been getting these little bumps. If you look at the levels, this won't let me do lines on the chart, but you can see here we got some support here and here. It's really that simple. It's not complicated at all. Market cap Supply and demand and Heiken Aishi.